Thank you all for joining today. So I'm James Regan, the head of trading at DIGITL, and today we're going to get into the technical case for issuing on Liquid. So some of the topics, we'll do a brief overview of DIGITL, talk through why Liquid. There's a great deck that we put together with Blockstream and led by Blockstream, which is makes the case quite well. Pulled a few slides from that, which we'll get into. But why Liquid here in the context of digital securities, but more broadly, digital assets, and in this case, the carbon offsets. Then we'll take you through the case study of how we've used Liquid to solve the real-world challenges presented by carbon markets. We'll get more into that in a bit. All right, so on this first page, we have DIGITL right in the middle of the capital markets. So we're connecting global investors with the world's best assets through a network of DIGITL's security exchanges. And we can see that the two major participants and stakeholders in capital markets are the issuers and investors, with the issuers being those who are pursuing capital, raising funds to grow their business, monetizing assets, and going around the globe to do so, while investors are deploying capital, investing in those companies and expecting a return. You can see the benefits of what we've built in the middle here. We think that what we've built as the core for this, what we're calling Bitcoin capital markets. So DIGITL is part of the technology layer. There are three, and whether or not you all saw the initial post that we contributed to the capital markets tab in the Build on Layer 2 community, just to return to that for a moment. The global digital markets really operate in layers very similar to the way that Bitcoin does. However, there's where Bitcoin has obviously the base money layer, and then everything that lies on top of that. They're a vertical stack. Here, it's really a horizontal distribution, and so we have the technology, the business, and the regulatory layers, which all operate together in order to create the smooth movement across these different digital markets, different regulatory regimes, and different types of businesses. So DIGITL is in the middle, part of the technology layer, and connects the Liquid network and Bitcoin to the regulatory layer, which is really enforced by the digital security exchanges. And then we have the issuers and investors on either side, and which are part of the business layer. And we can see those benefits for issuers who are going this route. Everything remains compliant across any jurisdiction. They can issue at a fraction of the cost. They can tokenize, really digitize anything, and do so on Bitcoin. And as they become more comfortable with this model, assume more control over the assets which they actually do control, and which in the current regime they end up turning over that control to many third parties. So then on the other side, we have investors who have myriad benefits as well. They can access any investment which would have typically been siloed to a jurisdiction. They can access it 24/7. Retail investors can now access assets which they never had access to before, such as sovereign debt, hence all classes. They can buy it with crypto and fiat. We use crypto with the most restrictive term there being something like a stable coin, USDC or Bitcoin. We're not operating with or facilitating the transfer of non-Bitcoin and non-stable coin assets. And then they can influence the options for what those assets actually do. They can become part of the communities that develop around the assets that they are passionate about. So there's community engagement built into many of the platforms that issue assets. And then because you have connections with the issuer, providing feedback allows investors to actually direct some of the way those assets evolve over time. And here we can see, and just so you all know, I'm going to provide this deck so anyone can go back and look through it at their leisure. So on the next page, we see here DIGITL and the participants which we are connecting across this ecosystem. So they all provide services that issuers and investors need today, and while all of these functions are currently conducted in a legacy system, here they are significantly streamlined because of the movement of the digital security rather than the analog security, which actually introduces third parties into basically every other one of these interactions in the current model. So, we continue to add more partners as it becomes valuable. But right now, on the upper left, you can see some of the logos of the issuers we're working with today. Upper right, groups of investors, and then underneath each of the issuers and investors, the various services and technology pieces that connect the issuers and investors in the capital markets and across the whole ecosystem. And at the core, of course, we've got Liquid, Bitcoin, and the global security exchanges. And that's where DIGITL lives as well, operating as the technology platform, which is really what we do, that connects all of these services. We should note, though, before moving on to look at these real world applications, that one transfer, the transfer agent that we work with, one of the transfer agents we work with, is the only transfer agent that has integrated with the Liquid network, and the only transfer agent that actually has a Bitcoin denominated chain available. So you can actually settle compliantly Bitcoin denominated assets using that transfer agent, which no other transfer agent can do. Everything gets swapped for USD value otherwise. So here, an example of using Liquid to solve a real world problem. So issuing the Blockstream mining note was huge for Blockstream and provides incredible value. And one of the things that DIGITL did when we came on was to help actually make it available to more people. So there were the initial tranches of distribution, and we helped to make it available to more investors by fractionalizing it and opening up some of the initial investor restrictions. So but basically those two ways of providing more access to an incredibly valuable product, which I for one wanted to buy at initial issuance and could not, and now I can. So you can go back and look at this this case study for how we went through this process with Blockstream. But this is one of the great, and we'll get more in the issuer platform into how you can subdivide assets from large size down to very, very small fractions of a share in order to reach a larger investor base. So we've talked about the issuer side of the global markets, but before we move on to look more at Liquid, I just want to show the investor side of our platform. So when we deal with issuers, they let me see here. We'll stick here. So the investor side of the platform is really geared towards longer term investors. They have less price sensitivity. They're coming to buy assets that are compelling, that have a good narrative that they want to participate in, and so we see BMN here right at the top. Underneath that we have Insider, and below that the NASDAQ stocks, which we've been able to tokenize and will soon be fractionalizing. And we'll also soon be adding the LSAL, which is a debt, El Salvadoran sovereign debt vehicle, which I don't know how many of you all have tried to purchased sovereign debt before, but it is a Byzantine process and is basically prohibitive for 99% of people. But we've figured out a way to both purchase the debt and then tokenize it so that anyone can participate in sovereign debt markets. This is not the volcano bond, just to be clear. This is a tokenized version of existing El Salvadoran debt, and is really a test case for doing that with any other sovereign debt. And the beauty of the digital capital markets is that once this is done once, it provides the legal test case and the regulatory clarity for doing it with any other product, which means that once you have a product and you want to issue like products, they can be done at a fraction of the time and sometimes as little as 5 days. So if we, once the El Salvadoran debt is listed and, we see a public interest in issuing something like, Argentinian or, Yemeni debt, we could do that in a fraction of the time, which is an exciting benefit of having this kind of regulatory oversight. And this is obviously we have mainly investors who are interested in our platform, but for the slightly more savvy trader, this is what they would see if they went in to actually buy or sell into an order book or place limit orders. We do have a fully functional, what we call the trader mode, rather than the investor mode. So an option, not as commonly used, but it's certainly there. So now issuing digital securities on the Liquid network. We understand what digital is doing and why we've chosen to build on Liquid, how integral it is to our process. But before we get into the case study of the counterbalance, the carbon offset, which we're going to be issuing in the coming months, I want to talk about the reason for Liquid. First, we all know that it's incredibly important that Liquid is built on Bitcoin. Few of us would likely be here if it weren't. The myriad benefits that alone contributes would probably be enough to consider building on Liquid. But here's the kicker. Liquid was purpose-built for issuing digital assets and can be used to issue any type of asset within any regulatory environment. This is huge because it removes the barriers of jurisdiction, which typically kept assets siloed into very restrictive environments. And so, as we see here, we could issue, equities, debt, derivatives, funds, REITs, and today we'll see we can issue even digital commodities. The addressable market for digital assets in general, all of these categories of assets, is also absolutely huge. It dwarfs any other potential digital investment opportunity. So again, we see this digital future. The Bitcoin capital markets are built on Bitcoin, and I love this this infographic because of how much it says about the way this system actually was actually designed and really thought through. So Liquid is the layer 2, and then the application layer that lives on that layer, and then the digital asset that lives on the application layer. So this is not something that most folks will ever have to think about, but for builders, for people who are really interested in understanding why all of this works the way that it does and why the benefits are so disproportionate, it's because of this nuance and the elegant relationship between these layers and the kinds of distinctions you can make as an issuer when interacting with the application layer like Blockstream AMP, and we'll get into that later, the benefits of doing something like a transfer restricted or an issuer tracked asset. And all of that's possible because the asset is living on top of the application layer of layer 2. And so it's important to understand that this is how that that vertical hierarchy works. But again, not something your run-of-the-mill investor's ever gonna run across. So So now more about AMP. AMP is, obviously we all love Bitcoin. We all love Liquid. AMP is the secret sauce, though. This is where a lot of the magic happens. And it's been great to work with some of the devs at Blockstream and really getting a better understanding of how we can maximize the utility of the different features which AMP provides. So these are kind of the large umbrella categories of things that AMP can contribute to the way that you think about the problems that you're going to solve. So the multi-sig authorization is really expressed in the way that you define the restrictions for your assets. So whether it's, like I said, the transfer restricted or issuer tracked or no restrictions at all. And then the category-based restrictions then reflect how that multi-sig interacts with the asset whenever you move it. Third-party logic, so someone can introduce even more granular enforcements at the level of the protocol without having to do it outside of that environment. And then practically for a lot of digital assets, we'll need to be able to freeze transactions. These are not things that can just disappear because they are tied to real world assets. So they can be reissued, burned, reissued. Then for auditing purposes, they can freeze, issuers can freeze the movement of assets. And when I'm sure you can all imagine a pretty hectic scenario of issuing dividends for a yielding product that as people are trying to move it around and functionally get the benefit of a double spend through the distribution of a dividend. So freezing assets during distribution of dividends allows all of that to operate smoothly as well. So very practical problem solving there. And then here, these are incredible, being able to attach KYC, distribute vested tokens. The issuing now and updating later is actually something we're going to return to when we examine the counterbalance project. But the idea that you can change some of the restrictions after doing an initial issuance is very, very useful. And here, name, ticker, and icon, we'll look at the way that it actually appears on chain and inside of wallets, because that's one of the things that makes a investment really particular. It doesn't depend on a exchange or a broker or anyone to display the relationship between those components. It all lives inside of the actual asset on chain. And so anywhere that asset moves, those things carry with it. So now the carbon offsets on the Liquid network. So this is our case study. We've been working with these folks for a while now, and think this is probably one of the better ways to look at how our ongoing and evolving understanding of the ways that we can use Liquid and AMP and even tertiary services like Sideswap can really maximize the problem solving potential when dealing with a new asset or a new project. So just high level, the things that we're dealing with here, the current carbon markets are very inefficient, slow, and opaque. That probably doesn't come as a surprise. Most legacy systems are. However, these are uniquely inefficient, slow, and opaque in that they don't have two-way markets. They're almost all conducted as OTC trades, and handled mainly through phone calls and like sticky notes. It's like the floor trading in the 80s. It's very, very slow. So we are introducing Liquid in order to improve basically every component of that process. So to improve registry, issuance, transfers, custody, and the process of retiring those credits. So in this section, we'll also discuss how and why we've built the levels of issuer control into our dashboard, and how issuers can move through those in phases, with the final goal of an issuer being able to issue today without knowing anything about you know digital securities, except for the benefits they get by going that route, and then eventually, once they're comfortable, taking over everything, assuming responsibility for all of the components of their issuance and ongoing management of assets. So here, just to get everyone up to speed on exactly what we're doing and why we're using Liquid, the carbon narratives that are most important, right? Despite how we may individually feel about the climate change or carbon or anything, the markets are quite real and quite demanding. And the exciting opportunity here is to participate in an industry that may grow 100x, as estimated by one of the major auditing firms, right? So then it's composed of two main markets: the regulated credits and voluntary offsets. So you might hear someone refer to carbon credits. Those are typically the things that are being bought by folks who need to buy them for whatever mandated reason. And then voluntary process would be buying of offsets. It is a probably an unnecessary distinction, but for now, that's how we'll refer to them. So counterbalance will start in voluntary and may eventually also serve regulated markets, given the nature of its offsets. So the industry as a whole lacks transparency and has challenges such as double spending, fraud, and poor quality of underlying assets that actually provide the offset for whoever's buying and in many cases retiring. Today, one of the things that we're solving for is the way the registry is handled. So registry is really used to track both the buying and selling of the credits after the initial issuance from a producer, and then the retirement as well. We are going to be doing all of that with Liquid. Liquid becomes the registry. So Counterbalance will be the first major carbon project and owner of assets to use the blockchain for the registry. This is important because it's innovative and hopefully will serve as a model for the industry as a whole. The initial estimates from engineers show that this producer has about 250 million tons of carbon, oil, and gas, which they can issue offsets for. And the really unique thing, and which has been rather ironic, that the offset industry doesn't prioritize it as much. But currently most offsets are issued based on agricultural or forest offsets, so preserving forest or agricultural land. And yet those sources of offset actually have the most risk because of the what they call the impermanence loss. So because those can be swept out from under an investor, that carbon can then be released at any moment. Acts of God, earthquakes, fires, roads that need to be built. There's any number of things that can happen that could destroy those underlying assets. Whereas with oil and gas, if you don't touch it, it doesn't go anywhere. So up until now, the environmental lobbies have been very reluctant to incentivize anything around oil and gas. But I think that, and many of the other folks involved in the project think that the future of these offsets might actually make them more valuable because they will carry less risk over time. So that's a bit about the project, and now we can start looking at the way we are interacting with it through our platform, and the way our platform engages with Liquid, and how all of that's organized. So just so you all know, I did update this presentation not long ago, and some of the figures are not numbered according to the actual order. I shifted some slides around and added some pictures. So I'll update this deck before I publish it for anyone to see. So the figures will actually be accurate, the figure numbers. All right. So here we are. So the normal issuance process, just to understand how we've adapted our process from what is normally a digital securities process to a digital commodity, just suggest that we should go through what's really involved in going from a legacy market to a Bitcoin capital market. And as I mentioned before, there are the three layers which are always acting in concert. And we can see here at the top of this page that there are 8 categories that can be managed during the issuing process. So the landing page, when you log into our, when an issuer logs into our portal, would show the cap table with all of the holders of their asset. And then we see the blockchain tab, which is the tab where you would go to interact with all of the Liquid functions, which your backend Elements Core wallet allows you to do. The other 7 categories define the other various components of an issuing and management process, which allow the asset to actually move seamlessly from investor to investor, and then even get burned and reissued. So next to the here we go. These are the holders. So if we go from here, this is kind of your high view of the cap table with just the categories. So the category of holder, company, broker, retirement, and individual investor. And then here we have the breakdown within those categories of the holders. So and just to be clear, all of these that we see today in the screenshots are a mock issuance that we did for a test case for how to go through this buying and retirement process for this project. So you'll see, Adidas and Nike didn't actually buy any of these, and Broker One is just someone who has my email address. I created all of these things, and we managed the this buyer flow in order to test basically the most restrictive environment, to make sure that everything would work the way the clients expected it to. So all of the screenshots you'll see are from these, whether it's our front end, our dashboard, or green wallets that reflect the broker movement of assets. So here you can see the breakdown of assets by investor, and they reflects the same kind of larger category percentage of distribution that we see in the cap table. And then if you go and you click on the holder, obviously there's my email address, but Nike. So one of the things that we're testing with this this issuance is managing investors, 2 different types of investors. One who comes directly to the issuer and purchases from them, in which case that issuer would get a distribution from the Elements Core wallet that the issuance was, the asset was initially issued from. And then the other flow would be a buyer who's buying from a broker who received their initial distribution from that issuing wallet. In this case, Nike is a holder who has an Elements wallet. They did not have a green wallet. So we can see here, and in the case of a someone who's gone through all of the KYC process, they'll actually end up with a lot of those categories filled in. And we'll see how later in the process, these categories can actually, the data from these categories can be pulled into the retirement process to correlate with the data that folks want to see on the registry. So figure numbers are actually holding up so far. Great. All right. So we are slide 19. Great. So once an issuer has added holders to their account, they don't have to have actually issued an asset yet. They need to, and in this case, even with an issuer track versus a transfer restricted asset, and we'll get more into that in a bit, they would still need to add holders in order to verify that they have green wallet managed asset accounts that can receive the asset when it gets distributed from the issuing wallet. So in that case, or in this case here, we've created the different categories. So in this case, you're looking at the companies. We have brokers, individual investors, and then the retirement wallet. And then we added all of these holders here. Very straightforward to add new holder. You click here and you add them. The difference here is that for Nike, as I mentioned, they have an Elements wallet. So their addresses were generated within our system, whereas all of the others we generated in a green wallet and then simply imported the AMP ID so that the broker, because that was where we were modeling the broker flow. So the broker would be able to then receive their assets into their green wallet AMP ID and sell to any myriad number of clients that they have. And here we can see the next step after getting all of the clients, or the holders rather, into the system with their corresponding AMP IDs. Then we actually go and whitelist them, and that's the process that you need to use for a transfer restricted asset. Because what happens when you transfer that specific type of asset is it actually checks with AMP to make sure that any movement of an asset from one address to another meets all of the requirements of the issuer's restrictions. So because this was issued as a transfer restricted asset, the whitelisting is necessary in order to pass through that filter. And that because it's been added to the whitelist, all of these holders can then receive the assets from the issuing wallet. And here's what you see as an issuer logging in when you just see the wallet that you create. So this is the producer issuance account, and we call it an account for the sake of folks who are not as familiar with wallets and the nomenclature surrounding them. A lot of the experience that we've had with issuers is actually figuring out ways to articulate the particular nomenclature of the digital ecosystem in ways that make it approachable for them. And so it's why we don't have a liquid tab, we have a blockchain tab. Folks, even if they don't understand really what a blockchain is, having liquid there would be even more enigmatic than blockchain. And in the case of wallets, understanding that you can have multiple accounts inside of a wallet is basically a non-starter for most. So we just go with the account nomenclature, and that allows folks to more seamlessly transition from what they understand as their accounts wherever they hold them now to these accounts which they still hold. So a bit gentler than otherwise. All right. So now we are on to the whitelist. And So if we were going to issue a new asset, so here we see the asset that we've already issued. This is, we see the ticker, we see this is the asset name, this is the ticker. I issued a million of them, and this was done on chain, so this is not on the test net. So as you can see here, there is some liquid Bitcoin in the account in order to fund transfers, which is one of the other technical hurdles we had to figure out, how to fund accounts for folks who are not probably technically savvy enough to easily get liquid Bitcoin in order to make all those transfers. But here we see if you were going to issue a new asset, and here we have the various options for interacting with an asset you already have issued or issuing a new one. So for the sake of looking at the new process, someone coming in for the first time would, who has already received the legal and regulatory clarity that their asset is ready for issuance, you can come in here, type in the name, ticker, number of them, and then one of the things that's very useful and really elegant about the way that the Liquid structures this process, by registering the domain of the issuer with an asset. Basically, it just requires the issuer to add a snippet of code to their servers. Once that becomes registered, then the asset, this is what actually allows the ticker, the logo, and the denominations to all travel seamlessly amongst any wallet that can hold the asset. I mean, it also provides further verification, public verification, and transparency for any investor who wants to validate that this is the asset they are intending to buy. And here we can see the precision down to 8 decimal places, like Bitcoin, which is where we leave it for the sake of being able to subdivide investments into the future. This is how we ended up subdividing the initial BMN into BMN1 and making it available to more folks, as basically increasing the precision of that asset. So once you've added the holders and issued the asset, then you can distribute. The distribution of the asset here, as we talked about, the Nike holds an Elements wallet, Adidas holds a Green wallet, and so does Broker One. Actually, Adidas holds a AMP ID inside of Broker One's wallet. So initial distribution was sent to all of these, and you can do it all, in a batch transaction from the issuing wallet, which is actually right here. So click on the send function, and you can send out this transaction with all of those initial distributions. Here is also where you can click on the details button to come here. And actually, just real quick, we're going to return to this burn function here, because this has taken a much larger place in this process than we had initially anticipated, and is perhaps one of the more interesting parts of this conversation. So from this interface, clicking on details lets you go in and look at basically all of the movement of the asset since it was issued. And here we can see basically anything that happens inside of the Elements node, the Elements core wallet, or sorry, the Elements core node, and inside of Elements wallets. This was the distribution to Nike. As I said, they have an Elements wallet, not a Green ID. Here, this distribution went to the broker, and so this was from the issuance wallet directly to these holders. Anything that moved from the holders after this point, I mean, we didn't send anything from Nike anywhere else, but we did send transactions from Broker One to Adidas, and then from Adidas to the retirement wallet. All of those transactions are reflected here. And we can see here also the up top, the domain was registered this year. By registering that domain, when you look at the asset, it shows that the asset itself was registered, which, as I said, gives some comfort to investors who know that that's one of the ways that you can validate the authenticity of the asset. And then it also provides clarity here on the block explorer. So this is actually where a lot of the the outward facing data will be pulled from on the Counterbalance website. So Counterbalance will be able to provide, so just using API calls to the block explorer, we'll be able to pull the relevant data. Because as you can imagine, most investors and most average folks don't need to see the issuance transaction or the block or the any of the decimal places. Most of this is not necessary. Certainly not contract hashes. So pull and display the relevant information, which would be ticker, the domain that it's registered to, the total remaining amount or the issued amount, and then the circulating amount. And so this is where things started to get interesting in our process. So as we talked about, the company, the way that these assets will be distributed is either from issuer directly to company or issuer directly to broker, who then sells to companies, clients on their own. And at any point in that process, an investor can hold these assets. We know that when a new asset comes to the carbon markets, they're typically held while folks try to assess how the market will value that asset. So we know that at least initially, most people are not going to, or at least when these assets come out, they're not going to be bought and immediately retired. Probably be a bit of a lag there. However, the buying and holding is obviously, in most cases, the easier of the two flows to navigate. There's a little bit of nuance to the way that we'll have to manage brokers, because brokers will have multiple clients, and that'll have to all happen inside of a green wallet. But the retirement process was a bit trickier because when a carbon credit gets retired, it has to be pulled permanently from circulation. And our initial proposal for this was to use an irretrievable wallet address. And here we can see the Vera registry, or a portion of what the current Vera registry looks like. And basically, what a company or client would need to do when they're retiring is correlate the credits they're retiring with these other data points that the industry has agreed it wants to see as part of the retirement process. So because we're not going to put all that data on chain, our proposal was to basically create this function in their website, in the Counterbalance website. So rather than having people going to third-party services like the Vera registry, the producer themselves can offer the option of retiring credits directly on their own website. Here, you would just click on a little tab that says register your retired offsets, because retiring the offsets doesn't require any of this. Retiring the offsets is literally just sending from your wallet to an address where those offsets can't be retrieved. So that happens prior to this step in the process. It's the correlating the retired assets with these other data points that becomes a bit trickier. And so what we had proposed was basically using the AMP ID for the wallet that is doing the send to the retirement wallet, and correlating that with this data. So basically, the person or company doing the retirement would input their AMP ID, And in the back end, it would just do an API call to check if that person had sent anything to the retirement address. Well, what we didn't realize is that in order to check those data points for an irretrievable wallet, you'd also have to have blinding keys here, which in theory is fine. The blinding key or unblinding keys you can use here, as you can see right here for the accessing unblinding keys and then copying that data. This is what was sent to the retirement wallet, which we kind of envisioned as the irretrievable wallet. This is the way it shows on chain. Well, if someone has access to the unblinding keys, then they have access to the private keys, which means that technically those assets are not irretrievable. And there's probably ways that we could resolve that by, introducing lawyers or some kind of other legal structure, outside of the blockchain, outside of Liquid, in order to solve that problem. But during our conversation with the Blockstream tech team, Matthew Haywood, thank you, Matthew, made it a great case for using burn addresses. And so the burn address basically solved this problem completely. We have not, I haven't redone the slides to reflect the burn process, but basically what we will do now instead, when a company retires an asset, they'll send it to a burn address, which it's functionally the same as sending it to any other address, except it's not a confidential, it doesn't show as a confidential transaction. Like you can see all of the other transactions that were submitted in this block, and then here is this transaction, which is a burn, which was sent to a burn address. It is not confidential. And so it doesn't require the trust in any third party holding unblinding keys to use those whenever someone wants to validate what was sent to that wallet, and then go through the whole formal process of retiring. The other benefit is that here this is obviously for a different asset that Matthew was sharing, a test asset that he shared with me. So the issued amount here is the total issued amount, which would be what we see in here. So the right here, the initial issuance would be in our case would be $1 million, and then this is the burned amount. So here we have one burn, and then the circulating amount reflects the total issued minus the burn. So you actually have less legwork to do on the side of whatever kind of public facing data you want to provide, because all of that is being already handled on chain, and it's much easier. It requires, obviously, again, no third parties to provide the access to the keys that would allow you to see that data otherwise. So we've changed our user flow or our backend, but that functionally doesn't change the process here, because a client would still just send those assets to an address, still just come here and type in their AMP ID, and then basically go through and enter in any of the data that they want to provide for the retirement process. And all of that stuff would then get correlated into a database that basically industry standards say, as long as people will use that. And so there is no like third party who audits Vera, basically the industry has accepted that is the standard. And because we've checked that this will meet those standards, as long as all of the same data is presented, we're meeting the same standards and using a significantly less onerous process with fewer third parties to achieve the same result and provide more clarity, and hopefully over time, I hope, better price signals that will improve the function of the market as a whole. So the other problem we were solving was the way that brokers interact. And so currently, as I said, the market operates like a a trading floor in the 80s, and the brokers are basically calling each other to see what kind of assets they have available and how much they want to sell at what price. Here, brokers could, and especially once we have some of the advanced trading features available, and we can integrate those into AMP assets, the ability to basically post limit orders, broker to be able to list all of the assets they have and the limit orders that they have in the books, would completely remove the third parties involved in escrow, which is currently one of the major third party components of the way the system operates. So when that happens, and we can integrate that, we will. But even in the meantime, having brokers able to manage all of their assets inside of their own AMP account, inside of their own green wallet, will allow them to not only custody their own assets, but move them easily between clients. If a client is selling to another client, which in this market doesn't happen that often, but certainly able to easily distribute to clients they work with regularly and retire on behalf of clients who they work with regularly. And we can see here, as we said before, the way this asset appears in any wallet that it gets transferred to, because the domain was registered and correlates with the ticker. We haven't registered a logo with it yet, but we see all of that appear here when it gets sent to a green wallet with an AMP ID. And the same thing is true here when it moves to the retirement address. So we're going to be changing the these screenshots when we present this next, and we're using a burn address. But for now, this is how we've changed that flow. So I hope that this presentation, I know I went a little bit longer than I intended, but I can stay a bit later and answer any questions, or answer all the questions I can answer. But I want to just reiterate before that, we said that we're solving a lot of problems here, and that the industry is trying to come into the 21st century, and we're using Liquid to do this. And so just to reiterate, we improved the function of the registry by removing the need for accounting by third parties. We improved issuance by managing the creating and distribution of assets from a single wallet on an Elements core node, which can be audited by anyone at any time. Transfers by creating batch transactions for the initial distribution, then streamlining the broker flow by using green wallets. Custody by allowing companies and brokers to actually hold the asset that they've purchased if they wish. And the retiring process by correlating those key data points contained in the burn address and total circulating supply with the secondary data points the industry uses to assess how the credits were used. So just a final note about the way all of this currently operates. For now, we assume that basically anyone that we help do an issuance, will be holding their hands, at least for now. But we've designed our platform so that as issuers become more comfortable with the technology, they can assume more of those responsibilities that we're managing right now until they've completely taken over the management of their assets. This is the trajectory we see for Counterbalance, who will likely continue to issue offsets for their reserves. And we look forward to seeing more issuers take that kind of control. It's their assets, they've earned it. So I hope you all have some questions, and I'm happy to dig into some of these ideas.
Thanks, James. Yeah, I think you did a great job explaining Digital's mission and how y'all are integrating Liquid. And then, the Counterbalance case study is kind of a real world example there. And thank you for walking us through. It's quite detailed. I know I have a few questions, but I'll let the other participants go first. How do you want to do this? You want me just to read you the
I can see it.
Okay.
I am looking at Adolfo's question.
Yeah. maybe we can like read it or
Hmm.
give a quick summary for people who are watching because
Sure.
I don't know if the recording will actually have the chat box to the side, but
Ah, okay.
yeah, go ahead. I'll let you handle it.
Sure, sure. He asks, says, yeah, hopefully this makes sense. You mentioned something about carbon offsets being sometimes double spent in the legacy system, right? You mean by that the ownership of the asset could be in the hands of more than one entity? I'm guessing that would create a lack of appetite to use it as a collateral in other financial operations, for example. If yes, are these two registries you mentioned responsible for that lack of proper tracking of the ownership of the asset? Also, are there only two registries or more? Um, so the registry that tracks the retirement is different than the registry that tracks the ownership. And so one of the elegant things that Liquid solves is it does both. And so right now, also one of the big hurdles we had in our initial conversations was the way folks currently deal with carbon. Like right now, each carbon credit. So if, for example, Counterbalance issued 250 million carbon credits to into the current legacy system, each of those 250 million credits would have its own unique identifier, which seems like bananas to us, right? We would never see that as necessary, but it took us a while to show everyone involved in the project why that's no longer necessary. Yeah, and it's that accounting process from initial issuance through the transfer and retirement, and all of it being publicly verifiable at any point, that allows them to make that hurdle from the system which they understand to one which is significantly streamlining all of that process. I mean, I can't imagine accounting for 250 million different ID identifiers, unique identifiers, and in this case, it's all done through Liquid, which is beautiful.
Adolfo, does that answer your question? Any follow up there? Um, okay, here's another.
Yeah. Um, Chuck Norris, both. So we basically design products for folks. So um, our services can be as bespoke or as hands off as someone wants. So basically, we offer a platform that allows issuers to and it's mainly, as you saw, mainly geared towards folks doing issuing digital securities, which have significantly higher bars for compliance than anything else. And so basically, the current cost for issuing and listing an asset is probably somewhere around um, $1 million to $2 million, depending on the asset. So based on our process, we got that down to between 75,000 and 150,000, depending on the asset and how it's being listed. So we make money by helping issuers bring assets to market by managing those assets. And we have a number of different products which we're working on and are in the pipeline for development. Um, Things that will help people in specifically in Bitcoin, things that will help folks in legacy markets transition assets into digital markets, and in 10 years with more Bitcoin and liquid adoption, I would see digital. I mean, ideally, we are incredibly hands off. So we've spent the last 5 years developing the business and regulatory frameworks that are part of the digital capital markets. and over the last year been integrating with Liquid. But a lot of our efforts have been in developing those other layers in our relationships and how we, how our technology interacts with them, such that ideally in 10 years, as Bitcoin and Liquid adoption, goes through the roof, companies can come to our platform, never talk to anyone, unless they need some very boutique, problem solving, and simply issue an asset, overnight and bring it to market the next day. Because the tech savvy entrepreneurs will know how to go through that process. They will have been interacting with their own digital assets that they custody in their own green wallets. And when they have an asset to bring to market, they can do it overnight. I would love to see. We would love to see a world where there are less restrictions on the movement of assets, while still providing the regulatory compliance, which keeps investors safe, and avoids things like FTX. I hope that answers your question.
Hey, James, as we're waiting for more questions from the audience, if there are any, one thing I wanted to bring up that may be useful for other issuer platforms, right, or third parties like DIGITL, is you mentioned some of the onboarding problems, like when you're onboarding issuers, like you mentioned nomenclature, the fact that you could have multiple accounts in a wallet, and also that you have to somehow fund these accounts with liquid Bitcoin to pay for transaction fees. Are there any other kind of onboarding hurdles that you guys encountered that that you can share with the community? Because I think that would be useful.
Yeah.
And ways that you solved it, or how you circumvented it, or whatever. But
well, so I was brought into this project at a later stage. So I've been working with them for a couple of months, and I know that earlier in the process there were a lot of those things were kind of worked out, such that when I got involved, they had already. I mean, they were like full on Bitcoiners. Like it was kind of nice, that they had accepted basically all of that and were really, anticipating the need to. Address the folks who hadn't been part of those conversations. So preparing brokers for interacting with things that they weren't as familiar with. But those are the big ones that we found, or that I've seen so far. The Well, actually, to be fair, one of the things, so, as we, whether you're a federation member, a functionary, and can actually do the peg in, peg out, if one is not able to do that, then one of the things that we also found as a workaround for getting liquid Bitcoin was actually, and I actually just started investigating this. Strike now has a new send API that they made publicly available, so that you can request payment. And if you make a request, you can send, scan your QR code and send US dollars. On the other side, get Bitcoin, and basically send that to a side swap API that converts that Bitcoin directly into liquid Bitcoin. And so through those two API integrations, you could basically get from US dollars into liquid Bitcoin inside of a green wallet or an Elements wallet. So that was one of the things that we had thought of to solve that problem, and would just be a scan of a QR code.
Interesting. I didn't know that was possible.
I mean, Strike just released that API send functionality, I think, last week.
Yeah, I mean, I was going to mention, liquid.taxi, where you can substitute liquid Bitcoin transaction fees with, USDT. But what we're talking about is like a pure fiat rail. to Bitcoin using those APIs. So that might be a little bit more. I mean, that makes more sense from a, if you're onboarding traditional investors and all that.
Yeah, I mean our biggest problem is because our main addressable market is not, especially for this project, is not Bitcoiners. It's the legacy companies that are using carbon offsets, and so we assume that none of them have Bitcoin. And so, how does someone who doesn't have Bitcoin get liquid Bitcoin? Yeah, it's got to find a way to turn those dollars into liquid Bitcoin. And so that was at least a good kind of stopgap measure. But yeah, there, and every time we run into these problems, they get and you solve them. It adds another tool in the tool chest, which is fantastic. So Ivar just asked, which traditional sectors markets do you think will be next to embrace tokenization? From which other sectors do you see demand? Um, so the process of digitization. I mean, I am particularly passionate about debt vehicles. So especially digitizing sovereign debt, and making sovereign debt markets more accessible to your average investor, because right now, basically the only folks who can fund, who can be the counterparty for sovereign debt are, world banks, and that becomes particularly problematic. Which, I mean, as we know from, I don't know how many of you all read the recent Gladstein piece about the IMF and World Bank, but just understanding how restructuring affects countries over, generations. Uh, the opportunity for changing the way that sovereign debt gets issued and managed, I think will be huge, because those markets are just gargantuan. So I hope that would be the next. I think that there's certainly incentive for investors in legacy securities to digitize, but that's the one that I'm most passionate about. I really think that would make a big difference across all sectors, all investments, and yeah. I also think that derivatives will be big once that can be done, and the demand for digitized derivatives grows. I don't know, Ivar, I hope that answers your question. The sorry, demand for tokenization. Right now, the most demand is from securities and folks doing those initial issuances who would otherwise be shut out of a legacy raise. So someone who, for the cost benefit of doing a $2 million listing in order to get access to the capital from a market listing, from an IPO, those are the folks who are really benefiting disproportionately right now from a digital security offering. However, over time, I mean, there's no reason why a larger company who could afford that cost wouldn't go with a digital security, because it's not like issuing in a legacy IPO gives you any more immediate access to liquidity. It's a kind of a logical fallacy that a lot of issuers still have, that simply by going through an IPO that they'll somehow generate liquidity. It's the the narrative and the value of the investment which actually drives that liquidity. So there's actually no disproportionate benefit to doing a legacy market IPO to doing a digital, global digital markets IPO, or listing, if the narrative around it is the same, you have functioning the same effect. So Drew asked, are you having to first orange pill people when onboarding them to Liquid, or do they see Liquid more of as a new technology? The latter. You're overwhelmingly seeing it operate as a new technology. Some folks are interested in Bitcoin as the underlying asset, but it's similar to the person who doesn't need to be explained Bitcoin because their currency is inflating away. It's what's better. And after some of the more technical kind of hurdles with counterbalance, I mean, the issuer has absolutely no doubt that this is the best way to go. It's just a matter of ironing out some of those initial questions, and then getting more into the practical expression of how to make all of those things happen.
Hey, James, I've got one more question, and then we can probably wrap it up, just to be
Sure.
mindful of your time and everything. And again, I appreciate, or we appreciate the you coming on and doing the inaugural live presentation on the platform. So it's been really insightful, and it's I think we'll have it available on the events page, and so people that couldn't attend live, they can go and watch it at their leisure. But um, one of the kind of value adds of buying the blockchain mining node on Merge and through Digital is you can buy it at, I think, at like 8 decimal places, right? So you can essentially buy only a few dollars worth.
Right.
Whereas outside the platform, the lowest denomination is I think 0.01, right? Which comes to, I don't know, a few $1,000s, I think, at current market price. So I'm just wondering, like what kind of technical voodoo did y'all do to achieve the fractional shares of BMN internally, and like are there any trade-offs there? Maybe you can kind of speak to that more.
The Well, so with I haven't checked it recently, but the last time I did, the different mm, places where BMN is listed have different withdrawal limits. I think, if I remember correctly, um, Bitfinex Securities had the lowest withdrawal limit, but they have the highest notional um, size. So, you have to buy more there in order to withdraw. Whereas with Merge, I think that you can't withdraw unless you have that if you still have that 0.01 in total BMN uh, size. So while you can purchase, and I believe this is still accurate, you'll have to forgive me if things have changed since, but that you could purchase, anything up to 500, $1,000 worth of BMN, but would not be able to withdraw it from Merge until it reaches a particular threshold. And I'm not sure whether or not that's something that's imposed through something like a transfer restriction, based on the AMP side of the asset management, or if it's an exchange function. But as far as the asset itself, we simply went through the process of taking the shares. So basically, what we had to do was purchase, and I believe that this is still the way that it operates. It's the way that we had to do it for our insider portfolio. Basically, we become a custodian and hold the asset, and then offer a derivative of the asset, which is tokenized at a whatever rate. Typically, not less than $1. A dollar is kind of the goal for folks. Um, and I'll have to double check that that's the process we use for this. But we did it using the same issuance dashboard, which I showed during the presentation, where basically you take an asset, um, and define the degree to which you want to refine that precision. And for this, we just did it to the 8 decimal places, and that's what you get. But anyone who buys it at at that size, uh, yet is still buying the underlying asset. It's not like uh, it's not like they're buying a paper BMN. They still have it, but in the case of something like uh, the BMN on merge, it just needs to reach a threshold before it can be withdrawn. So that's kind of the downside, I would say. And I'm not sure again what those thresholds are and if they've changed in the last couple months.
Cool. Yeah. Yeah. Thanks for clarifying that. Um, if we don't have any more questions, I think we can wrap it up.
Sure.
But
Well, it was a pleasure. I'm glad we got these events kicked off. This is great.
for sure, man. Yeah, I'm pleasantly surprised with the platform. It's pretty smooth onboarding, and I don't think we had any hiccups. So
No, this was smooth.
yeah, thanks again.
Yeah, thank
Appreciate
you everyone for coming.
it.
Yeah, I appreciate your time and questions.